Buckle up if you're holding XRP, XLM, XDC, or HBAR right now. You're sitting on the four pillars of tomorrow's financial system. While everyone else is chasing dog coins and trend trades, the world's biggest banks are quietly building the infrastructure that'll make these tokens absolutely essential. And here's the kicker, they're not telling you about it until it's too late to get in cheap. These aren't just random crypto picks. They're the chosen ones, handpicked by institutions to replace the creaky old system that's been limping along for decades. So grab your coffee, because I'm about to show you exactly how these four digital assets are wired into the future of money, who's pulling the strings behind the scenes, and why the great switchover is happening faster than anyone realizes. Hit that subscribe button for crypto talk. You won't get these insider breakdowns from your typical crypto YouTubers. Let's dive into the institutional master plan that's reshaping global finance. Here's what most people don't understand. There's actually a blueprint for this financial revolution. SWIFT, that ancient messaging dinosaur that banks have been using since 1973, is getting the boot. We're talking about a system that processes 45 million messages daily but still takes 25 days to settle payments and charges $25.75 per transaction. That's Stone Age technology in a digital world. The replacement, lightning-fast, programmable, interconnected digital settlement networks. And guess which four names keep popping up in every institutional meeting? XRP handles real-time liquidity magic. XLM crushes cross-border micropayments. XDC dominates enterprise trade finance. HBAR manages public-private integration with military-grade compliance. Each one tackles a different piece of the same massive puzzle, eliminating friction. Friction in moving money, friction in accessing liquidity, friction in meeting regulations, friction in maintaining transparency. And they're not just talking about solutions, they're delivering live infrastructure, running active pilot programs, and executing enterprise integrations that are operational right now. But here's the thing that should make you pay attention. Mainstream media isn't hyping these tokens at all. Why? Because institutional money doesn't front-run retail investors. They accumulate quietly in the shadows. They sign non-disclosure agreements. They test their systems in private regulatory sandboxes. They absolutely don't want you catching on until the early bird window has slammed shut. Take Ripple, they're not building some flashy crypto brand for social media. They're constructing RippleNet, a fully regulated liquidity engine that plugs straight into central banks, payment highways, and foreign exchange providers. Their breakthrough technology, on-demand liquidity, eliminates the need for banks to park billions in pre-funded accounts. That's the kind of cost-cutting that makes CFOs wake up at night with dollar signs in their eyes. Meanwhile, Stellar isn't chasing Twitter followers or TikTok fame. They've been quietly installing the financial plumbing for fiat-to-crypto interoperability across developing markets. They're partnering with NGOs, development funds, and financial institutions that are solving real access problems, not chasing the latest trend cycles. XDC is building in a completely different galaxy, enterprise-grade trade finance. They're embedding themselves into trade trusts and regulatory initiatives backed by national governments. This isn't about digital art or meme culture. This is about tokenizing invoices, bills of lading, and letters of credit, replacing the decades-old infrastructure that's choking $19 trillion in global trade flows. And HBAR, that's the secret weapon that already crossed the finish line. With a governing council packed with world-leading corporations and banks, plus real-world applications spanning carbon markets to retail payment systems to central bank digital currency infrastructure, Hedera's distributed ledger technology is built for systems that simply cannot fail. They're not running proof-of-concept experiments anymore. They're running production-grade solutions in live environments. Still think this is just another crypto hype cycle? Then explain why major banks are already integrating these ecosystems, why regulatory frameworks are quietly shifting to accommodate distributed ledger-based settlement, why ISO 20022 went live across all major financial institutions, and why these four tokens are either compliant with it or natively designed for it from day one. This isn't speculation or roadmap promises anymore. This is operational infrastructure that's processing real transactions right now. Let's zoom in on XRP, the liquidity powerhouse driving global settlement transformation. XRP isn't just another fast-moving token. It was specifically engineered to become the backbone of international liquidity management. Its mission: replace the ancient nostro-vostro banking system, where financial institutions have to lock up trillions of dollars in foreign accounts just to facilitate cross-border transactions. That's massive amounts of trapped capital waiting for liberation. Ripple's on-demand liquidity solution is the game-changer here. It leverages XRP as a bridge currency, enabling near-instant settlement across different jurisdictions. No more correspondent banking headaches, no more pre-funding requirements, and no more exposure to volatile foreign exchange windows. Let's zoom in on XRP, the liquidity powerhouse driving global settlement transformation. XRP isn't just another fast-moving token. It was specifically engineered to become the backbone of international liquidity management. Its mission: replace the ancient nostro-vostro banking system, where financial institutions have to lock up trillions of dollars in foreign accounts just to facilitate cross-border transactions. That's massive amounts of trapped capital waiting for liberation. Ripple's on-demand liquidity solution is the game-changer here. It leverages XRP as a bridge currency, enabling near-instant settlement across different jurisdictions. No more correspondent banking headaches, no more pre-funding requirements, and no more exposure to volatile foreign exchange windows. As of 2025, ODL is operational across more than 70 countries, and that network keeps expanding. The post-lawsuit regulatory clarity in the United States removed a major institutional roadblock. Banks that were previously sitting on the sidelines are now actively testing, piloting, and in many cases already processing transactions with XRP. Ripple has constructed one of the most sophisticated real-time liquidity networks on the planet. Let's talk specific names and partnerships. Bank of America isn't just watching from the sidelines. They're using XRP for internal transactions and hold 83 Ripple-related patents. Santander, one of Europe's banking giants, has woven Ripple technology into their OnePay FX system. Trianglo, Ripple's gateway into Southeast Asia, is processing transactions in real time using XRP as the bridge asset. Novity, a digital payments powerhouse in Australia, operates Ripple corridors connecting to Southeast Asia and beyond. QNB, Qatar's largest banking institution, is collaborating with Ripple to launch remittance corridors reaching into Asian markets. And that's barely scratching the surface. Ripple maintains partnerships with over 300 institutional clients worldwide, processing more than $70 billion in volume through RippleNet. But here's where the story gets even bigger: central bank digital currencies. Ripple isn't just providing liquidity solutions. They're constructing the foundational infrastructure for sovereign digital currencies. Governments including Palau, Bhutan, and Montenegro are utilizing Ripple's CBDC platform to test and deploy their national digital currencies. These aren't theoretical pilots, they're real-world implementations serving actual populations. Think about the implications. A private company is operating tokenized, programmable currencies for national governments, and all of this infrastructure runs on XRP ledger architecture. In 2024 alone, Ripple saw a 300% increase in institutional client volume. What most XRP holders don't grasp is this fundamental truth. Ripple's strategy was never focused on retail adoption. It's enterprise-first, regulator-compliant, and institution-driven from the ground up. That means when the switch flips, it won't be loud or public. It'll manifest as a sudden liquidity migration when a major bank or consortium of banks shifts from legacy payment corridors to ODL rails overnight. You won't see it coming in advance, but when it happens, it'll be too late to position yourself. That's exactly why sophisticated money is already taking positions. Because when XRP activates at institutional scale, it doesn't just move the price, it transforms the entire plumbing of global value transfer. Now let's explore Stellar Lumens, the unsung champion of financial inclusion. Stellar specializes in fast, affordable, and compliant payments that can reach anyone, anywhere on the planet. But what makes XLM genuinely powerful is that it doesn't need media attention to gain real traction. It just needs access points. And that's precisely what Stellar has been quietly constructing across emerging markets, remittance corridors, and grassroots banking systems. Smart contract activity on Stellar increased sevenfold in just one quarter of 2025. Let's start with one of their most impactful partnerships, MoneyGram. MoneyGram and Stellar completely revolutionized the remittance industry together. They created a global fiat-to-crypto on- and off-ramp that spans over 300,000 retail locations across 180-plus countries. Through this network, users can walk into any MoneyGram outlet with physical cash and walk out with USDC on Stellar rails, or do the reverse conversion. No bank account required, no credit checks, no waiting days for approvals. That represents genuine financial empowerment for millions of people, and they've already processed nearly $30 million through this system. But that's just the beginning. Stellar has also embedded itself deep into the public sector. The United Nations Capital Development Fund leverages Stellar for blockchain-based payments in humanitarian aid and last-mile delivery systems. When the UNHCR needed to deliver emergency aid in Ukraine, they used Stellar to send USDC directly to digital wallets via SMS, connecting to 400,000 global cash-out partners. USDC, the world's second-largest stablecoin, operates on Stellar rails alongside Ethereum and Solana, but with significantly lower fees and faster settlement times. That's why Stellar is rapidly becoming the preferred blockchain for stablecoin utility in developing nations. With over $83 million in USDC supply and $4.2 billion in payment volume processed. Partners like Leaf Global, Carry Exchange, and Wire are using Stellar to connect regions across Africa, Southeast Asia, and Latin America with seamless money movement capabilities. But Stellar isn't trying to become the next Ethereum. They're not interested in buzzwords like DeFi summer or speculative token launches. Their focus remains laser-targeted on payment infrastructure, regulatory compliance, and institutional-grade transaction speed. And now, with the integration of Soroban smart contracts, the Stellar Development Foundation has expanded beyond simple payments. Their investment in Pelego Labs, a decentralized trade finance platform, demonstrates they're building sophisticated financial logic into Stellar's infrastructure. These smart contracts enable institutions to program credit issuance, supply chain finance, and yield products, all on a low-cost, rapid settlement Layer 1 blockchain. Here's why that transformation is massive. A microlender in Uganda can offer real-time loans to farmers using Soroban logic. A diaspora worker in London can send remittances to family in Nigeria instantly, in dollars or local currency. A fintech startup in Brazil can build a complete neobank on Stellar infrastructure without needing a traditional banking license. These aren't theoretical use cases, they're live applications processing real transactions right now. And because Stellar is open source, fast, and designed with regulatory compliance as a priority, it's become the quiet favorite for NGOs, central banks, and fintech startups that need a plug-and-play blockchain solution that actually delivers results. Here's the ironic part. While the broader crypto community chased Layer 2 solutions, yield farming, and meme coins, Stellar kept their heads down and built infrastructure. Infrastructure that's now powering some of the most underappreciated but highest volume financial flows in the world. So if you're holding XLM, you're not betting on hype or speculation. You're holding critical infrastructure. And just like XRP, they're executing without fanfare or social media noise. Next time someone tells you XLM is boring or dead, remind them that boring is exactly what global institutions want. Dead is what the old payment rails are becoming. Stellar didn't come here to play games, they came to replace the entire system. If you're holding XDC, you're positioned early in a sector that most investors don't even comprehend: trade finance. We're talking about $19 trillion in global trade flows that still crawl through outdated paper-based systems. XDC Network, powered by XinFin, is completely rewriting that playbook. Here's what they've accomplished that nobody's talking about: full integration into Trade Trust, Singapore's global trade standard. Strategic partnerships with IMDA, ITFA, and TFRM, complete tokenization of real-world assets, invoices, and letters of credit. The result? XDC is positioning itself as the settlement layer for digitized trade documents, something that banks, freight companies, and ports desperately need, not just want. XDC achieved something remarkable in 2024. They became the first Layer 1 blockchain fully compliant with UNCITRAL's model law on electronic transferable records. That's legal certainty that's completely unique among blockchain projects. While XDC operates under the radar, major institutions like Swiss Bank, R3 Corda, and My Contract are actively building on top of their infrastructure. The numbers tell the story. XDC processes over 2,000 transactions per second with near zero fees, and they've seen their tokenized assets grow from $105 million in 2023 to $1.47 billion in 2024. Electronic bills of lading that used to take 2 weeks to process now complete in under 3 hours. XDC isn't designed for day traders or retail speculators. It's a utility engine for the B2B financial infrastructure that actually powers global commerce. And when institutional adoption reaches critical mass, the impact won't be subtle, it'll be transformational. And you guys, I have a special trick for you which nobody seems to be using, and I cannot wrap my head around why. Because if you sign up through my link down in the description onto the BTCC exchange, you get a 10% deposit bonus, and now stay with me here. Now here comes the important part: if you have any trading capital on any other exchange, and you move it to your newly created BTCC account, you get on top of your capital, you moved another 10% extra trading capital. As an example, if you move or deposit a 100K to your account, you get 10K for free. I'm not kidding, I really don't understand why nobody is doing this. To me, it really seems like people sometimes are too lazy or just don't like free money. I mean, like, I cannot make that account for you, will need to that yourself. Alright, let's jump back into the video. Finally, let's talk about Hedera Hashgraph, the most enterprise-adopted distributed ledger technology in existence. HBAR isn't trying to compete with Ethereum or chase DeFi trends. It was designed from the ground up specifically for governments, banks, and global corporations that demand security, speed, and governance transparency. Let's look at the receipts. Their governing council includes Google, IBM, Boeing, Dell, Standard Bank, and Shinhan Bank, 39 global organizations with equal voting rights. Companies like Davu, Avery Dennison, and XBAR use HBAR for supply chain and sustainability tracking. They're running tokenized CBDC pilots through MTech, Drop, and WorldPay FIS partnerships. The performance metrics are staggering. HBAR processes over 10,000 transactions per second with 3/7-second finality, and each transaction costs just 0.001 on average, while using only 0.003 watt-hours of energy. In 2024, they processed 4.4 million transactions with $2.2 billion in volume. That's 159% and 174% year-over-year growth, respectively. HBAR's architecture makes it nearly impossible to fork, spam, or manipulate, which is exactly why regulated environments are choosing Hedera over Ethereum. As tokenization of real estate, carbon credits, and central bank money expands, HBAR is quietly becoming the compliance-first backbone operating behind the scenes. The platform has processed over 70 billion transactions to date, with daily unique active wallets growing 72% year-over-year. They've also launched an asset tokenization studio and formed partnerships with NVIDIA and Intel for AI integration. This is why banks don't publicly discuss HBAR. They're too busy building production systems with it. You've heard the phrase, flip the switch. But here's the reality, it's not a single button. It's a carefully orchestrated timeline, and here's what's happening right now that should get your attention. ISO 20022 is now active across all major financial institutions, with over 70% prepared for full integration. Ripple is settling CBDCs cross-border in real time with multiple governments. Stellar is connecting fiat and crypto across Africa and South America through live partnerships. XDC is embedding itself into UN-backed trade finance corridors with regulatory approval. HBAR is running production testnets for programmable digital cash with banks and central banks. The infrastructure is built, the institutions are integrated, the only missing piece, public awareness, and that's intentional. Retail investors don't know because they're not supposed to know yet. The switch won't announce itself with press releases or social media campaigns. It'll activate during a liquidity crisis, a regulatory mandate, or a systemic breakdown that forces banks to immediately deploy what they've already constructed and tested. That's the precise moment when XRP, XLM, XDC, and HBAR stop being speculative tokens and become the operational rails of a completely new global financial system. So here's the bottom line. You're not early to this party anymore, but you're right on time, barely. If you're holding XRP, XLM, XDC, or HBAR, now is the critical moment to understand exactly what you're holding in your portfolio. Because the people who don't understand these fundamentals will end up chasing the pump after it's already happened. They'll be asking, why is everything moving now, while scratching their heads, but you'll know exactly what's happening. You'll understand that the switch wasn't flipped for retail investors. It was flipped around them by institutions that have been building in silence for years. So position yourself accordingly, and remember this moment when the mainstream finally catches on. Smash that like button if this opened your eyes to what's really happening behind the scenes. Share this breakdown with anyone who still thinks the old financial system is calling the shots. And hit subscribe to Crypto Talk because you won't get these deep institutional insights from mainstream crypto channels until it's way too late to matter. The future of finance is already live, and now you know where to look.